Greetings. Welcome to my weekend market recap, 30th July 2023. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. If you wanted to, you could contact me using my email ID info@superiorprofit.co. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems and only the Q systems to make trading decisions. Q has multiple components. All the components run on the Metastock platform and the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with the live systems. First, as usual, we'll have a look at the global markets. Before I start that, I want to mention one thing. In my village, I live in a village in Thailand. It is raining heavily and sometimes the electricity is tripping off. If that happens, then this YouTube live session will end abruptly. I apologize for that in advance if that happens. And if that happens, I may not be able to continue with the live market recap today. But I hope it will not happen. Let's see. Let us continue with a look at the global market, starting with Australian index, all ordinaries. At the lower edge, when it was here, I mentioned that was the time to buy using the concept of box setup. That was then. Now it is at the upper edge of the sideways range. We also have one bear release signal on Friday. However, the candle shape is indecisive with a long lower tail. If the candle shape was bearish, I would not mind shorting some fundamentally weak stocks in the Australian market on Friday, but that was not the case. So I may do one thing. I may watch Australian index to see on Monday if it is going down, crossing below Friday's low. If that happens, then I may look for low risk shorting opportunities in the Australian market. It is moving sideways, and at present I don't have any trade setup in all ordinaries, but my preferred trading direction is bearish. Japan's Topix index is next. Earlier, Topix was going up with higher high, higher low. That was in an uptrend. The uptrend stopped in last couple of weeks. Now it is moving sideways. The sideways range is created by trendline support at the lower edge and watermark resistance at the upper edge. Because it is moving sideways, we will try to apply the concept of box trade setup, and we don't have any box long or box short setup now. You may wait to see if it can break out of the range before deciding your next directional bias. Next, China's CSI 300 index. It is also inside a range created by trendline resistance and support. It's closer to the upper edge, and I can see there is a trendline resistance in weekly also. So what I will hope happens is price goes to the trendline resistances and reverse from there. That will give me very low risk shorting opportunities. On the other hand, if it breaks to the upside, I will not be in a hurry to buy, because by that time the recent low will be very far away. So if it breaks to the upside, I will wait patiently for it to pull back and go up again. That will give the next trend following long setup. So I may look out for both, either a reversal short setup if the trend line resistances hold, or a trend following long setup if the trend line resistances are broken. Right now I will avoid taking any trades. Next, India's Nifty 50 index. This was the strongest of the global markets, including the USA market. However, it is not so strong now. Now, if I did not have the Q charts, I would still continue to say that this is a very strong chart. It is indeed a strong chart. It still has higher high and higher low. We don't have lower high, lower low yet. But I am seeing multiple weaknesses at the top. And this weakness is not in terms of downtrending chart, but it is in terms of weakness signals that are appearing at the top. One of them is the weekly cluster of indecisions at the top. They tend to be bearish. One is important, and a cluster coming together is even more concerning. So we have cluster of bearish indecisions at the top in the longer term weekly interval. And in the daily interval, we have a bearish headwind. If you look back from this point onward, the traffic light candle color was either green or yellow all along. After the bearish headwind appeared, the traffic light color changed to red. It is remaining red on Friday, though Friday's candle shape is indecisive. There is no short setup now in Nifty 50, but if it continues to go down, you may look for shorting opportunities in individual stocks. Will I look to short Nifty itself? No, because even if Nifty goes down, let's say Monday or even Monday and Tuesday both, it will come too close to the trend line support for me to consider a short trade in Nifty itself. But there will be, I'm quite sure, individual fundamentally weak stocks to short if Nifty starts coming down on Monday or Tuesday. Now, why also I am concerned about Nifty as far as bullish trades are concerned is for another reason. For the pattern that has proven to be very effective in the past. That pattern is at jump thrust high, meaning at extremely extended situation. So extended that it is usually not sustainable, and that extension happened at very high price level. So jump thrust high, both jump and thrust high, not just one of them, at price extreme high. Then came a big move down 3, extreme bearish momentum, the parent of all momentum signals. So if you think about it, who is going to short the strongest of all global markets at the very top? Probably it is not people like you or me. Certainly not me. I'm not going to short the strongest of the global markets at the very top with that much of bearish intensity. And if some bigger people or bigger organizations sold at the very top, they may not be done with the selling yet. Doesn't mean it will come down immediately, but it means that we may look for proper Q short setup. And if that happens, I am happy to take that short setup, be it in Nifty or be it in fundamentally weak stocks. And this pattern, jump thrust high at price extreme high with big move down 3, it did come in one of the USA market indexes also. That is why I am of the view that USA market is overbought and I may start to look for shorting opportunities, though not yet. I'll come back to USA market later. Let's have a look at the last of the global markets we look at, that is FTSE index, UK market. That is also inside a range. It is closer to the upper edge than the lower edge, and we have cluster of indecisions at the top. Those are concerning. Again, my preferred trading direction will be bearish direction if it can go to the trend line resistance and reverses from there. And you can see there is a trend line resistance in weekly also. I will certainly prefer to take bearish trades provided the price bounces down from the trend line resistances. So we looked at the global markets. None of them are telling me to buy. None of them, including India, which was the strongest of the global markets. Now let's look at the USA market. And I tweeted a while ago that my view of the market is that it is overbought. It is overbought from multiple angles, but I tweeted one chart. Let's have a look at that chart. My Twitter handle is Superior Profit, and I shared this market breadth chart just a while ago. What does it say? It talks about the internal market breadth of the major market indexes: Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 1500, and S&P 500. It's not talking about the indexes, but talking about the internal health of the indexes by looking at all the constituent stocks and how they are moving relative to how they had moved in the past. One very effective assessment of whether the market or these indexes internally are overbought or not is this study, percentage of stocks above 50-day moving average. Whenever it hits the upper threshold shown by this green dotted line, then it is overbought. And we can see for Dow Jones Industrials, it is overbought. Nasdaq 100, it is overbought. S&P 500, it is overbought, and even S&P 1500, a very broad index, that is overbought. The only one that is not overbought yet is Russell 2000, the small cap index. Now, there are two ways of looking at it. One way is that, well, Russell 2000 is not overbought, so let us expect it to become overbought, go up bit more. The another way of looking at it is that it is not getting overbought, though every other market index is overbought internally. So probably it is weak and it is not going to get overbought. Probably it will fall first. Which one of these two options will you choose? I will choose actually the later one, that it is the weakest of the market indexes, and we can see that not only from external ETF or future or index chart, but from this internal health check. It is the weakest, and my view is that it is going to remain weak. So if I am going to short any of the market indexes, I would like to short IWM or Russell 2000 futures if I am going to short any of the market indexes. Now there are other market breadth indicators here that talk about whether the market is overbought or not. One of them is this 3-month new high low. Once again, these are all visual charts. The moment this plot hits the upper extreme indicated by these dotted lines here, then it is overbought. And in terms of this 3-month new high low, we can see all the indexes, including Russell 2000, we may say that they are all overbought. So all the 4 major market indexes are overbought. What about market composites? So from market indexes, we are looking at market composites. That's a more broader view. So let's look at that. Let's look at the Nasdaq and NYSE as a whole. For NYSE, the percentage of stocks above 50-day moving average, it has already hit the upper extreme. It is overbought. If we look at the 3-month new high low, it has hit the upper extreme, that is overbought. Whereas for Nasdaq, neither the percentage of stocks above 50-day moving average nor the 3-month new high low, none of them are overbought. So again, we have two possibilities. One way to think is that, well, Nasdaq as a whole is not overbought. Probably it will go up, become overbought before a reversal. The other thought is that it is the weaker of the two composites, and it is probably going to remain weak as a whole and it will come down. So if I wanted to short one of the two composites, if that was possible, I would have shorted Nasdaq composite, provided there was a proper Q short setup on the composite charts. Now again, just like in case of small cap Russell 2000, which option will you choose? Will you choose the option that it will go up to become overbought, or that it is weak and it is remaining weak, going to remain weak, it will come down before NYSE? We get some hint from the other signals. The other signals are not only in this chart, there are other charts also, but in this chart we have one important signal, that is Hindenburg. That is a signal, that is a skull signal, that is interpreted as a point where professionals are selling whereas amateurs are buying. That tends to come near the market top. Does it indicate the exact market top? Not necessarily, but often after the Hindenburg signal comes, market struggles to go up and sometimes it makes major corrections. Is this a confirmed Hindenburg? No. Confirmed Hindenburg will come with a magenta color. This is in yellow color, so this is an Hindenburg alert. What did we see coming before the Hindenburg alert? A series of, both in Nasdaq and NYSE, Bango signals. Those represent buying, irrational exuberance in buying. So after a series of irrational exuberance buying, we see that Nasdaq as a whole could not go up much. Instead, it displayed a Hindenburg warning signal. We don't have a Hindenburg warning signal in NYSE yet. We also don't have any distribution count. We also don't have any Phoenix signal. Those are additional market breadth bearish signals. Those have not come yet. We have so far only the Hindenburg signal. And we see NYSE is overbought, but Nasdaq is not. Now, I mentioned that this is not the only chart related to Nasdaq. We also have the chart related to Nasdaq 100. This is Nasdaq Composite. Now Nasdaq 100 was and is one of the strongest, probably the strongest of the market ETFs. Let's look at QQQ now. And for looking at the market ETFs in the USA market, I changed from Q Global running on Metastock to Q Elite running on TradeStation. We saw that Nasdaq Composite is weaker than NYSE. So we might think from looking at that QQQ, the Nasdaq ETF, would be weaker than SPY, but that is not the case. QQQ is actually the strongest. What does it tell us? It tells us that a few mega cap stocks are holding the QQQ higher, whereas under the hood in Nasdaq it is much weaker, not at all as strong, not even nearly as strong as QQQ. Nasdaq Composite is in fact weaker than NYSE Composite when looking at internals. Now the strongest of the market ETFs, largely influenced by the mega caps, and you can see even on this Friday the mega caps, all of them went up by huge percentages, ranging from Apple going up by 1.4 percentage to Meta going up by 4.4%, Tesla going up by 4.2%. So these mega caps going up by such a large percentage once again had a large impact on Friday's gain of QQQ of 1.8%, almost 1.9%. In spite of that huge moves, those huge moves in mega caps, in spite of that 1.9% gain in QQQ, if you look at the bullish candle of Friday, it is relatively much less strong than the bearish candle of Thursday. After heavy selling on Thursday, yes, Friday went up, but if you just look at those two candle shapes, Friday's candle is much weaker. And what is the interpretation again? Friday's candle is bullish largely because of the mega caps going up so large percentages, because Nasdaq Composite is actually weaker. Now the strongest of the market ETFs held up by the mega caps, do we see some pattern that is concerning? Well, it is in an uptrend, no doubt about that. There are only trend line supports, no trend line resistance yet. And it still has higher high, higher low. So it is in a confirmed uptrend. But the concerning pattern is here, the one that we saw in India's Nifty 50 at jump thrust high, price extreme high, came a big move down 3. So somebody who is much bigger, either individuals or organizations, they sold at the very top. Are they done with the selling? We don't know. We'll never know before the fact. We'll only know after the fact. But if past analysis is any thing to go by, then this pattern usually leads to a price move lower. It doesn't lead to a price move higher. So the strongest of the market ETFs is giving a pattern that is not giving a bullish feeling, but it has no bearish setup yet, and it is not going to give a bearish setup so easily, again going by past experiences. Why? Because there are just too many trend line supports one after another in daily, and then there will be a trend line support in weekly. It will take a while to break through all of them. We have seen that in the past, so it's not going to give a bearish setup in QQQ itself. But again, Nasdaq Composite is much weaker, and NYSE is of course weaker than QQQ. We'll have short setups in individual stocks if QQQ starts to topple over as well as the other market ETF starts to topple over. Let's look at SPY. Also in a confirmed uptrend. Higher high, higher low, only trend line support, no trend line resistance. It is at jump thrust high, so it is overbought. So QQQ, SPY both are so high that usually it is not sustainable. In the past, we have seen whenever jump thrust both hit extreme high, that up move is not sustainable. So SPY is overbought from that angle also. What we are seeing is that not only from the internal market breadth view that I shared earlier, from the external ETF view also, we see the market is overbought. What about DIA? DIA is approaching the extreme overbought condition, and it is weaker relatively speaking, but it is weaker relatively speaking relative to SPY QQQ, but it is still in an uptrend. And for last couple of weeks, DIA had been very strong. Is there any signal that is concerning? Yes, that is the cluster of bearish indecision at the top. That is a concern, but again, there is no bearish setup. And lastly, IWM. If you remember, when we looked at the market index's internal health, I made a comment that out of the two options, whether Russell 2000 will go up, hit overbought before coming down, or it is weak, so it will continue to remain weak and it will come down fast. I chose the second option, and that is also because I looked at IWM chart. In the weekly, it has a strong trendline resistance, and once again this week it stopped right at the trendline resistance, the same thing that happened 1 week ago. If IWM starts to go down next week, I think it may be appropriate, at least for my style of trading, to look for shorting opportunities in small cap stocks. Will I try to short IWM itself? Probably no, not for swing trading that I am going to hold overnight, because IWM has a trend line support nearby. If that support is broken, then I may not mind shorting IWM also. But as you know, I have Q index. I can always drill down into IWM constituents. Instead of shorting an average of 2000 stocks, I am able to find out the weaker stocks inside IWM, in terms of both fundamentals and technicals and industry strength, and I may short those stocks instead of trying to short IWM. But those who trade ETFs mostly or futures mostly, they may also consider shorting IWM if this trend line support is broken. It looks like that if the market goes down, IWM will give the short setup before the other market ETFs. That is my market view looking at internal health and the external view. Now let's look at technical breadth. Technical breadth is important for making profit because we need the stock to move in our trading direction, and whether we decide to buy or short is decided based on technical signals. I use fundamentals, industry strength, those are very useful, but I need a stock to go up before buying. Give me a buy setup before buying. So let's look at the technical breadth, and this is the Q Finder technical breadth weekly interval that I shared in the previous market recap 1 week ago. And if you remember, I showed this plot last time, technical breadth, and I mentioned this headwind signal. hitting a threshold much beyond the threshold, at which point the headwind color is lit up to magenta. That was concerning. This headwind threshold reaching in the weekly interval is always something to take note of, because it may often, mostly, not always, but often it may lead to those stocks coming down. This was previous week's technical breadth, weekly interval. And note one thing, that week we had 68% of signals, setups actually, 68% signals were still bullish. This was 1 week ago. 68% bullish, but we had reversal signals at the very top. Headwind is one of those unique signals in Q systems that comes at the very top. So we still had bullish market, but we had bearish signals at the very top. 68%. Remember this percentage, that was 1 week ago. And let's look at technical breadth this week. This week, the technical breadth weekly interval as of Friday's close, it has come down drastically, isn't it? Come down by about 10%. I always say technical breadth is always important for trading, and this Q finder shows something that is probably not available in other systems, other non-Q systems, and also other Q components. We clearly see that after the bearish headwind appeared 1 week ago, market weakened, and that once again shows the value of keeping an eye on the headwind signal. The bearish headwind came at the very top 1 week ago, and clearly the market weakened. Now we see that it is not bullish anymore, it is balanced between bulls and bears. That is the weekly picture. Of course, Friday itself was bullish. Friday the market recovered. So Friday's technical breadth is bullish. And I mentioned in the tweet before this session that I may look for some buy setups. I'll come to that what kind of stock may be less risky at this point. But I am able to look for some buy setups because Friday's technical breadth is bullish. Maybe I'll use bottom-up analysis. I'll drill down to the bullish setups and try to find some trades. I'll come back to that. Let's look at the market from some other angles. One angle is still pending, that is Q edge, sector, industry, stock, advanced decline, breadth. The longer term view, monthly view and 10 days view, that is bullish, no doubt about that. Even the weekly view, 5 days view, is bullish. More so at the sector level, at the industry level and stock level, it is more balanced. It is still more bullish than bearish, but it is more balanced between bulls and bears. We saw some weakness over 2 days, but strength on Friday. Where will it go next? We don't know. We see a pattern of changing strength, bullish, bearish, bullish. The bullishness may continue, or this flip-flop may continue and it may lead to bearish picture next week. We don't know what will happen. We only know so far that market is overbought. So if we are buying stocks, we may be extra cautious. Try to buy stocks where we have some cushion, meaning buy stocks that are probably going to do better even if the market turns bearish from this overbought condition. Now, is the market overbought? If we look at the bucket analysis, bucket analysis looks at the percentage of stocks in different buckets, and these buckets are equidistant slots inside the respective Bollinger Bands. The bucket analysis becomes overbought when percentage of stocks in the uppermost bucket hits 30-40%, but it is now only at 8.3%, so it is not overbought. And it is bullish because 67% of stocks are above mid Bollinger Band. So bucket analysis is saying it is not overbought. So market can go either way if you consider bucket analysis also. If we consider technical breadth of Friday also, then market can go on the bullish side. And if we look at market indexes, internal health, then it is too overbought, it may come down as well. One last thing, I think we didn't look at it yet. Let's look at the market breadth total view. Market breadth total view as a whole, if you look at percentage of stocks above 50-day moving average, it's very close to being overbought. 3-month new high low, very close to being overbought. Not there yet, but very close. And we have the Hindenburg's alert signal, warning signal that came from Nasdaq. We saw that earlier. So we have both possibilities. Market may go up a bit more at least, or it may start to reverse. If it starts to reverse, as I mentioned, I would prefer to go and short smaller cap stocks, assuming IWM continues to remain the weakest. But if we wanted to buy, that possibility is also there because market is not overbought from certain angles, namely not from bucket analysis, not from market based total view. What kind of stocks could we buy? I don't want to tempt myself or others to buy into many stocks because of the Hindenburg and because of that pattern coming in QQQ, that pattern of jump thrust high, price extreme high, and then came big move down 3. Those patterns have very high success rate historically of leading to a downturn. So I don't want to tempt myself certainly to buy many stocks, but if I wanted to, looking at the possibility of market still going up, let's look at the bullish setups. I'm using Q Finder, so it is going to be a bottom-up analysis looking at technical setups first. And I'm looking at the bullish daily setups. For swing trading, the primary interval to make decisions is daily. Here we have one column that shows the stocks are at price extreme high, low or middle. High is green, price extreme low is red, price extreme middle, price middle is yellow. Now I mentioned that if I am looking to buy in the current market condition, I will be extra cautious. So the stocks that are at price extreme high, they may also come down faster. Stocks that go up like rockets may come down as rocks. So I may not be happy, at least in my personal style, to buy the stocks that are already at price extreme high. I would rather buy stocks that are at price extreme low, that are giving proper buy trade setup and that are fundamentally strong in strong industries. So let's do this bottom up analysis. Let's only look at the stocks that are at price extreme low. And we have multiple possible trade setups. I can see many stocks are giving trend following flow setup. Quite a number of stocks are also giving breakout setup. Both are valid trade setups. Some are giving gap setup, some are giving sideways market setup. We could go for both flow or breakout. They have significant number of stocks. Let's go for breakout for this exercise. Later on after the session you may look at the stocks giving flow trend following setups as well. Let's look at the breakout stocks, 11 stocks. I'm going to not open their charts. I'm going to create a scorecard for these stocks because I am going to look at their fundamentals. I always do that because I have the tools to calculate fundamental scorecard in real time, and in this market condition I'll be extra cautious. So I have these 11 stocks. Of course, all of them went up. I expected that because they gave a breakout long setup. Let's look at their scorecard. Again, look at the market, keep the market condition in mind. Market is toppy. Growth stocks go up like rockets, come down as rocks, more than value stocks. So in this market condition, I may look to buy if I buy the value stocks using the valuation scorecard. So let's look at only the value stocks, no point looking at them. And then let us add another extra level of cushion in terms of dividend yield. And I can see out of these 5 stocks that I am left with, remember I started with all liquid stocks, thousands of stocks. With a few clicks, I am left with 5 stocks, but now I am going to also have extra cushion for peace of mind, that is dividend yield. So let's look at only these 3 stocks. Am I going to open the charts now? I could, but let's not do that. Let's look at their industry scorecard. We could open charts also. 3 is not too many to open. And we see these 3 stocks are in 2 industries. Both are among the top 20% in terms of strength: apparel, retail, and marine transportation. Now notice also one thing. What are the 2 industries that I am ending up with? They are quite resilient industries. They are not susceptible to sudden change because these are things people will need always. So even if the market goes down, one may be able to hold on to the stocks longer term. Though we may enter them as swing trading, we may also take them for longer term investing because the dividend yields are very attractive, 6 to 7%. They are in industries that are resilient, that will remain in vogue for long time to come, probably forever. And they are undervalued stocks. So let's go back to the stocks. Now I am going to open the charts. What am I opening? I am opening 3 stocks that are undervalued with high dividend yield, that are in the strongest industries at present. The first one that comes is Foot Locker. We all probably wear shoes and will continue to wear shoes going forward. Now Foot Locker did have a sharp drop here. If you are using icon like I do, you may see why this drop happened. It had a huge gap down drop, and interestingly what happened is that once it hit jump thrust low, it stopped going down. That we have seen over and over again. Once a stock hits jump thrust low, then that downtrend is usually unsustainable. Usually it steadies or even goes up. So it steadied clearly for a while, stopped right at the trend line support, and now it has broken above one trend line resistance. There is another trend line resistance nearby. So there are possible ways of trading it, but before deciding that, let's look at the stock using both weekly and daily. See what the weekly is also saying. The weekly had a sharp drop as the daily had a sharp drop. Then weekly stopped right at the watermark support. And notice again the cluster of bullish indecisions came, and then the backdrop color changed from bearish to yellow. This is the first week that the backdrop color has changed to bullish with a bull release signal as well. So the weekly is telling that there is a low risk buy point in the stock. In the daily, we have a breakout setup. there is another trend line resistance. So I mentioned there could be multiple ways of trading it. One is to wait for the next trend line resistance to be broken, or if one wanted, especially looking at the high dividend yield, one could short the put. You could short the put at this trend line support, which will probably be the weekly watermark support. It is less likely for those supports to be broken. Less likely doesn't mean it cannot happen, but if it happens, we will have the dividend coming in from the stock. So one approach could be to short the put at the nearby major support level, provided we are happy to hold the stock longer term if we get assigned. Another is to wait for the breakout to happen from the next trend line resistance. And the third approach will be to look at the stock intraday on Monday and see if we have a precise long entry setup on the 5-minute or 10-minute chart. That will also be a valid Q technique to take a bullish position in Footlocker. We had two more stocks. Why don't we look at those stocks and see that yes, they may be in different industries, but if we had to choose only one, which one would I choose? Personally, I see there are enough reasons for myself in terms of industry score, in terms of fundamentals, in terms of dividend yield, in terms of technicals. I'm okay to take a long position in Footlocker. But let's look at the other stocks, also other two stocks. Next one is SBSW. This one broke out of one trend line resistance, in fact probably two of them, but it is moving in too narrow range. So much of a narrow range that I will not buy as of Friday's close. In this case, I will certainly wait for this next trend line resistance to be broken before buying. And I also don't have an opportunity to have a short put right now. The nearby support is very far. I will not get much premium if I try to short the put that far away, and anyway it's a very low price stock. Actually current price is here. Low price stocks, shorting the put at the nearby support will not give me any premium. Interestingly, I'm doing it live. Notice the bullish headwind came at the very bottom. Once again it could catch the very bottom. Did it give a buy setup? Probably no. But remember, either we could apply a headwind trade setup, or we could buy on the first bullish flow after the bullish headwind if that gave us a low risk entry point, which indeed came on this day. Now I am going to wait for this next trend line resistance to be broken before buying. We had one last stock. Let's look at that. This is looking good. In a way, it is looking better than Footlocker. Well, let's look at it using weekly daily, and I'll explain why just by looking at it momentarily I could make that comment. Okay, weekly has even more strength. Like Footlocker, this stock SBLK, and this is a marine transportation shipping stock, marine transportation. It also stopped at the watermark support. Interestingly, once again, the bullish headwind in weekly caught almost the very bottom, previous low. Price came down to that same low, tried to test it, stopped there, and this is the first week where it broke out of the trend line resistance after a long time. So the weekly backdrop, color shape, both are bullish. Weekly is telling us to buy, and daily has trend line support plus a trend line resistance breakout. So this is giving a breakout setup. And why in a way I like it more than Footlocker is because it has no nearby trend line resistance. The next resistance is very far. How could one trade it? One could buy it at the close on Friday itself. There would not be any need to wait for the entry because the next trend line resistance is far away. One could buy the stock. One could also short the put at this trend line support. You could also short the put at the closing price, near to the closing price. That is a matter of preference, personally what I do, if the nearby support has good enough premium, I may shop I may short the put at the support. But if the premium at the nearby support is too low, then I don't mind shorting the put at the money or near the money. So this is a stock I would not mind buying. The same conclusion as Foot Locker, and they are in different industries. But if I had to choose only one, knowing that they are in very different industries, I would probably choose SBLK. Now, when I said that we already saw that SBLK and Foot Locker both are in very strong industries, why not we look at SBLK's peer stocks? The industry score is strong. Let's create a one-page scorecard for SBLK, and I have a few minutes before I hit 1 hour, so no harm doing that. Now I'm using SBLK as the root stock to create a scorecard and also do a peer analysis. Nothing is stored in my computer, everything is retrieved in real time from Refinitiv. It calculated the scorecard. Now it is retrieving the stocks that are peer stocks, industry peers and similar industry peers, and then it will create a scorecard of the peer stocks. Give it a few seconds. Well, this happens sometimes. This happens sometimes during the weekend. It did not retrieve the data. That is fine. It didn't get any response from Refinitiv. I may try one more time. Pause and play to resend the request to Refinitiv to get all the PR stocks. Let's see. Yes, now see. As I mentioned, sometimes Refinitiv may not give a response. We may pause and replay it. It will connect with Refinitiv again, and now it has retrieved 17 PR stocks. SBLK already gave a buy setup. Let's look at the other stocks. And remember, from Q Edge, we already saw the industry, marine transportation, it was one of the top 20%. That is a relative strength of the industry. One more reason why I wanted to generate the scorecard is to ensure that not only relatively speaking the industry is very strong, in itself also it is strong. 94% of peer stocks went up on Friday. That is showing very healthy bullishness in the industry in itself. And it is an undervalued stock, SBLK, with 7.7% dividend yield. So that has a breakout setup. Let's look at the other stocks to see if we find some other lucrative stocks in terms of, let's also do the same kind of stock finding, undervalued with high dividend yield. And I see one stock, ZIM, that has 111% dividend yield. I don't know if that is sustainable or not. Let's not look at that. Sorry, what did I press? ZIM. So I'm not going to look at ZIM, though you may look at it. Let me look at the other stock other than SBLK, that is GSL, that is also undervalued and has a 7% dividend yield. Let's look at this stock. See if GSL is also giving a buy setup or not. Well, this is clearly strong. Clearly strong. Am I going to buy now? No. I would like to buy when the stock was going up right at this point. What would be the Q setup that I would apply? I would apply the bullish headwind buy setup and also the box setup because it came at a double bottom and gave the bull release signal. So it was moving inside a range probably a trend line support, gave a bullish and bull release. So that would be the lowest risk point to buy the stock. I would not buy it today, but it is certainly strong. Indeed, it gave a big move up 3 and it broke out of the previous watermark resistance level. So this is strong, but in my style, I don't like to buy breakouts so much. I already have the other stock SBLK, which is also breakout. Notice that GSL, this stock, Global Ship Leasing, GSL is also a breakout, but it is a breakout from a watermark resistance. That is a breakout at a very high price level. Whereas SBLK, if I may go back to it for a second, it is breaking out from a very low price level. Now, if I am buying a stock, by the way, SBLK is also regaining the yellow direction line. So if I am buying a stock that has high dividend yield, I prefer to buy it at a lower price level. Then usually the bigger players will support it more strongly at a lower price level because of its dividend. That's my hypothesis at least. So I would like to buy SPLK, but looking at the PR stocks and looking at the other GSL stock also in the same industry, it confirms my bullishness of the industry as a whole. So I found at least one stock that can be bought, probably two, including Foot Locker, that could be bought even in the current market condition, and see how I focused on stocks that are having cushion from multiple angles. Lower risk entry point is one, high dividend yield is one. I selected industries that are inherently resilient. We need to use their products and services all the time, and they are in strong industries as well. Though I found two stocks that could be buy candidates, I again want to mention that my market view is remaining that it is overbought, and there are some things that are not overbought yet, but some patterns including Hindenburg. Let me repeat again, it's worth repeating. The Hindenburg and the jump thrust high, price extreme high, then came big move down 3 in QQQ. Those are reasons enough for me to pause, or certainly slow down or pause in buying. If I buy, I'll buy, like to buy like the stocks I analyzed today, because they will give me additional cushion, and I would not mind probably holding on to them longer term if I needed to. Let me end today's session here. Thanks a lot for joining. Thank God that I didn't have an electricity trip off during the session. I look forward to seeing you in my next session. That will most likely be next weekend. I'll announce the date time on Twitter as usual. Have a great weekend, and as these live examples show, and as I always say, there is no reason not to do that. Trade profitably. Thank you.